Hey everyone, welcome back to Corporate Decoder. Today we're diving into the Jupiter Neurosciences 10K, their annual report, which is basically a year-end tell-all. It's like when you finally clean out your closet, some good finds, some old skeletons, and maybe a surprise or two that were hiding in the back. You wouldn't believe what we found. First, the overview, Jupiter Neurosciences, a company chasing treatments for tricky brain diseases and those super rare conditions you probably haven't heard of. They're all about J-Tora, a souped up version of resveratrol, the stuff in red wine that's supposed to be good for you. Now to the financials, and here's where the story gets interesting. Let's start with a flashing red light. The report highlights substantial doubt about the company's ability to continue as a going concern. Ouch! That's business speak for we're not sure we can keep the lights on. They had no revenue and net loss of $2.4 million and burned through almost $4 million in cash during the year. To put it plainly, they spent a lot more than they made. And it's not just losses, Jupiter is carrying a noticeable amount of debt. This debt could really squeeze their cash flow, making it harder to fund research, manage the business, and pay the bills. However, it's not all bad news. They managed to raise a little over $9.7 million in an IPO. That's an initial public offering when a company first offers shares to the public. But it doesn't change the overall picture of a company walking a financial tightrope. Let's dive a bit deeper into those financials so we can see what Jupiter Neurosciences is really up against. Check this out. They have roughly 33 million shares of common stock out there. What does that mean? Basically, that's a lot of slices in the pie, and each slice isn't worth very much right now, especially considering the overall financial situation. The commission file number 001411265 is a small but critical detail. It's like their ID with the SEC helping them keep track of all publicly traded companies. Not really interesting unless you are an accountant. There's nothing incorporated by reference. Basically, it means they aren't trying to pull anything in from previous reports or filings. What you see is what you get in this report. But what makes them special is the work on rare diseases. Think of conditions like Friedreich's ataxia or MELIS. They're chasing orphan drug designation for these, which is basically a golden ticket from the FDA offering incentives and market exclusivity. Now they're going after Parkinson's and early Alzheimer's, but big pharma companies and small biotechs are competitors. For example, in rare disease, Reata Pharmaceuticals is making omaveloxolone, Biogen is acquiring Reata. It means JNS has competition and it's getting serious. If they don't watch out, they could be squeezed out of the market. There's a growing interest in Atrorol from Asian organizations. That's because resveratrol is becoming more common in herbal medicines. They have service agreements to try to get ahead in China, Malaysia, and Singapore. But they're not just focused on the sick. They've partnered with Aganova AG, who they got the license for J-Otrolol from, to develop nutritional products targeting longevity and beauty. It's all about beauty from within, baby. But here's a red flag. There's this agreement in Southeast Asia with Dominant Treasure Health Company where they paid $223 million. The fees were paid even if the partner doesn't perform and they cannot be returned. That's a bit risky. And it's not just what the company does, their stock is very volatile too. You can easily influence prices of our common stock. Now let's talk risk. And boy, are there risks. Number one, and I cannot stress this enough, they need more cash. If they don't get it, the lights go out and the clinical trials are delayed. What they need to do is to generate sufficient cash flow from operations and obtaining additional capital and financing. If they are unable to raise additional funding from other sources, they may be unable to continue in business. For further discussion about our ability to continue as a going concern and our plan for future liquidity, see management's discussion and analysis of financial condition and results of operations, ability to continue as a going concern, and our plan for future liquidity, see management's discussion and analysis of financial condition and results of operations, ability to continue as a going concern. Another risk is that the clinical trials need to show a good result and approved by the FDA. For example, the Leqembi treatment of Eisai and Biogen is already approved by experts for early stage Alzheimer's patients. Competition in that field is already fierce. Even if their product gets approved, there is no assurance that they will be able to pay for it. And third-party payers are saying, show me the money, so they need to conduct expensive studies and convince payers that their treatment is worth it. And there are the usual legal issues involving the Foreign Corrupt Practices Act. This can be very expensive. You have to make sure employees and partners don't bribe anyone for business. These laws generally prohibit companies and their employees, agents, representatives, business partners, and third-party intermediaries from directly or indirectly offering, promising, giving, or authorizing others to give anything of value, either directly or indirectly, to recipients in the public or private sector, in order to influence official action or otherwise obtain or retain business, that will likely result in a materially significant diversion of management's attention and resources, and significant defense costs and other professional fees. I don't want to end on just risks, but they also have many strengths too. They go to trade shows and are always seeking commercial opportunities. They focus on resveratrol, so if it's approved, then they can leverage to new indications. They focus on deals and agreements for a quick win. In conclusion, Jupiter Neurosciences is at a crossroads. They have potential with their Jacora platform, but they're facing serious financial challenges and intense competition. The next year will be crucial to secure funding, get clinical trials rolling, and prove they can turn their science into sustainable revenue. Thanks for watching. If you found this corporate deep dive helpful, please like, subscribe, and leave a comment below. Until next time, keep those investments smart and those risks assessed.